In today's video, I just want to quickly demonstrate one of the strategy which I have shared on my YouTube channel for you guys to see that those things I share on this YouTube channel are basically how I take my trade or how I approach the market. And today I'll be using one of the strategy which I have shared on my YouTube channel titled the 2 time frame strategy. And this is GBP USD 1 hour time frame, as you can see on my screen. Series of break of structures to the upside, indicating that this price action is basically bullish. So now this is where we are now. We are basically around this area here. We are basically around this area, and as you can see, we have a break of structure to the upside. So if we have a break of structure to the upside, based on the 2 time frame rules, so I need 1 time frame for my analysis, just for me to be able to get the bias of the market. And on this 1 hour GBP USD chart, the bias has shown to me that the price is basically moving towards the upside. So now on this same 1 hour, I need to mark out an institutional reference point like a POI, where I will be looking to join this bullish movement to the upside. And if you can watch carefully, you will see that at this area I have an imbalance or a fair value gap at that area. So that fair value gap happens to be my area of POI, so it happens to be my area of POI, as you can see. So what is going to be my expectation, since I know that price is basically moving towards the upside? My expectation is to wait for price to retrace back into this 1 hour POI. So the moment price start retracing back into this 1 hour POI, I can now scale to my 15 minutes time frame or my 5 minutes time frame. So when I scale to my 15 minutes time frame or my 5 minutes time frame, inside this POI which I have identified on the 1 hour time frame, what did I want to see? I want to see something like this: price retracing back into this area of imbalance which I have identified on the 1 hour time frame. And the moment price gets into this area, or probably it may even extend to the downside, I want to see a market structure shift, something of this nature. I want to see it. Then I'll wait for a pullback into the institutional reference point on that lower time frame. Then I'll be able to take my buy opportunity in line with what we have seen on the 1 hour time frame. So I'll patiently wait for price to come to this 1 hour POI. So if price come into this 1 hour imbalance, which happens to be my point of interest, then I'll definitely scale down to the lower time frame and look for my entry confirmation. And this is an update regarding the first part of the video which you watch, whereby I analyze the chart, and I told you guys that I want to trade based on the 2 time frame strategy which I have shared on my YouTube channel. I do not want you to look at it as if maybe the strategy is not working, because one thing you need to learn is there is no perfect strategy when it comes to trading. At one point or another, your strategy will definitely fail you. That strategy will definitely fail you, and that's the reason why you will hear some forex trader, they will tell you that there's no holy grail strategy. So yesterday, or based on the first part of the video which you have watched, I explained to you guys that I actually want to take my trade from this point of interest imbalance on this 1 hour time frame. So my expectation is for price to come into that point of interest, and price should give me a market structure shift on the lower time frame and continue to rally to the upside. That is my expectation. But yesterday I waited for good 10 hours. I waited for good 10 hours before price was able to come into this PO high. I'm going to put a screenshot of when price eventually came into that PO high after 10 good hours. So I waited for 10 hours and price eventually came into that PO high. So immediately price came into that PO high, I jumped straight to the 5 minutes time frame in order to look for my market structure shift so that I can take the trade to the upside. But to my greatest surprise, I found the market structure shift quite alright. But the market structure shift failed me. So I put the entry after finding the market structure shift. If I have the screenshot, I am going to put it here. But if I do not have the screenshot, I just want you guys to believe my word, because I am not here to lie on my setup or my entry. The truth is, I got the market structure shift, then I go in with my normal lot size based on my position size calculator. I go in with my lot size, and within let's say 30 minutes, I got stopped out. And that is what you can basically see here. So you can see that price violates this PO high. And basically that was what got me stopped out. So I found the setup on the 5 minutes time frame in market structure shift, and I am expecting it to basically continue to push to the upside, but unfortunately that setup failed me. So in this story now, what did I want you guys to pick from this story? What I want you guys to pick is, no matter how juicy your setup is, try as much as possible to always consider risk management. That is what is going to save you when it comes to trading, because that juicy setup can eventually fail you. That juicy setup that you always use often and often, you don't know when that same setup will fail you. So that's the reason why it is always advisable that you key in with a proper risk management whenever you want to trade. So that's the reason why I am basically sharing this video with you guys. And in my next subsequent video, come up with an educational video to educate you guys on what we call inversion fair value gap. Because what happened here is what they call the inversion fair value gap. So in my next subsequent video, I'm going to make a video on inversion fair value gap so that you guys can know how to use inversion fair value gap whenever you find it on your chart. Because apparently at DBIN, I am still awake when price eventually violates this fair value gap, and I came back to 1 hour time frame and I saw it obvious like this, I would have looked for opportunity to short this GBP USD, because now it is very clear that GBP USD is not ready to go bullish. And for today, I am expecting price to continue to trade lower, probably up to this area of liquidity, or up to this area of liquidity. So that's my expectation based on what happened yesterday. Because if price would have continued pushing bullish, price ought not to violate this fair value gap. So just like I have said, in my next subsequent video, I am going to put a series together where I will educate you guys on how to use inversion fair value gap whenever you found it on your chart. And I will see you in my next subsequent video. Have a great day, guys.